Hi, everyone. This is Carol Lighthall with Okemo Valley Chamber of Commerce. Thanks for joining in today. Chris Harriman with the SBA District Office is back with us to do an overview of the stimulus programs through the SBA. Any questions you have related to implementation or anything else you have in mind. Thanks for joining us, Chris. And with that, I'll turn it over. Thank you.
The application form for the EIDL is very simple, and it is for both profit and not-for-profit organizations. And as a result of this last stimulus package, it's also available for agricultural businesses, which is new.
Awesome.
And a really great thing if it would just open up, so so they could get in there. But anyway, how it works is you open it up and it's very simple. I did it myself. It took 14 minutes. And the only reason it took me 14 minutes is because I had to go find my tax ID number to use to put in there. And so it's very simple. You basically, I've got a little cheat sheet that Carol has. I'm happy to send it out again if you want to send it out to everybody. I think you have it on your website, don't you? I believe you. Did you put anyway?
We have a lot of stuff on the website.
If not, you can put it there, and it's basically just the link when it's open, plus a few little hints about what you need to have in front of you to fill out the application. It's your tax ID number or Social Security number, whichever one you use. You will need to know the obviously the legal name of the company if it has a doing business as a fictitious name, address, phone number, your sales receipts for the last 12 months, or you can use 2019, what you used on your tax return. If you're a nonprofit, it does ask you to have a couple of other pieces of information, including your annual expenses, operating expenses. A for-profit company, it also asks for cost of goods sold if you have that. Not everyone uses cost of goods sold. For those of you that are not familiar with it, that is something that a business that typically has to buy materials or supplies in order to provide their service or product. So for instance, a car repair shop, when you take your car in, they have to buy the parts to put into your car. So the parts that they purchase wholesale are considered their cost of goods sold, and that is taken out of their annual revenue because that's not their profit. So anyway, if you have cost of goods sold, only about 25% of all businesses do. You'll put that in. Otherwise, you'll put 0. And it will ask you how many employees you have. Now, this is an important one. If you are a sole proprietor, you'll put 1. You are your own employee. If you have part-time people, that's fine. You can count heads. So if you have 5 part-time employees, put 5. And the reason that's important is because for 2 reasons. One of them is that in the application process, they want to know how many companies are employing people. Our goal is to get people back to work and keep businesses open. And the other reason is because the loan advance portion of this program is based on the number of employees you have. So once you go through this process, you put in the information on the agent/owner, which is typically the owner or the person that is, could be the finance person or whatever, but it needs to be somebody that is authorized to sign a loan document. And then you will so that person will provide personal information. And even if you are a nonprofit and you would not be personally guaranteeing anything as a representative of a nonprofit, you do need to have a person in that area, and that you need to provide the Social Security number, the date of birth, place of birth, and general information about that person. The reason that that is provided is because we have to verify that you are in fact a person that is applying for the loan and not a robot. And so it needs to be a verifiable human being. Does not mean you are committing to anything or guaranteeing anything. So anyway, so you continue through, and then it asks if you would like to be considered for the loan advance portion of this program. You click that box. It's very important that you click that box, and then you put in the routing number and account number for your business checking account. Go through to the end, and it'll pop, and you submit, and it'll pop up with a screen that provides an application submitted application number. And I'm just suggesting that people print that out because it has the application number and an expiration date on it. And if you want to check the status through the Office of Disaster Assistance, now they are able to look that number up for you, then you'll have it. So print that out, and then you're finished. And then from there, it's a waiting game. So we have determined that actually the latest application I have seen in Vermont, well, so I'm only talking about myself because there are 6 of us taking all these calls, and I've probably spoken to maybe 1,000 people. And of those people that we've discussed the EIDL program, the latest application that I have seen that has received the deposit into their checking account was April 7th. So that is obviously 3 weeks ago. Have later applications been funded? I'm sure they have. I just don't know about them personally. I have asked people to get back to me and let me know when their deposit came in. We have no way of knowing. We have no way of going in the back door and checking. So I am 100% depending on people to email me back and say, I got my money. Some of them are, but I'm sure that people are busy and they're nervous and they're they need to get back to work. So they're the last thing on their list is to call me and tell me they got their money. So, but the reason I'm telling you that though is there's a lot of applications out there. So we've been told that they're going in order. So I'm not sure where they are on the calendar in processing those loans and making those deposits. So that's what happens is there will be the very next thing after your submission, you will not get an email confirmation. You will not get a phone call confirmation. Your confirmation that the application has been submitted successfully is that page that pops up and gives you the application number. There is no further contact until you get a deposit into your checking account. And then it will, like a miracle, pop in, and it will have a notation on there from SBA, I believe it is, Treasury, and it will be for $1,000 per employee up to $10,000. So it's important that you put the correct number of employees, and it's important that it's a valid number of employees that can be documented, because if you inflate that number, then there could be issues with that as well. So I just want to make sure that you understand it's important to put the correct number of employees in there, both so that you can get the right amount of money and so that you can make sure that you have documented proof that you in fact have that many employees. So that would be the next thing that happens. Once that happens, we are being told from people in Maine, because their disaster was declared before ours, so they're ahead of the game a little bit and they've had more experience. We're being told that about 2 weeks after the deposit, there will be an email. The email will discuss the loan portion of it. So the EIDL, Economic Injury Disaster Loan, is a loan. You are applying for a loan. SBA and the Treasury Department have decided to, as part of that loan, provide you with a cash deposit loan advance that will be forgiven. So the amount that goes directly into your account first is going to be given to you. You will not have to repay it. The rest of it, the rest of the EIDL, is in the form of a loan. So that portion will be based on the information you provided in the application online, which your annual revenue, cost of goods sold, annual operating expenses if you're a nonprofit, credit rating, credit score, and a few other things. And so what'll happen is you will get an email from SBA about 2 weeks after the deposit, and that loan processor will ask you to open a portal so that documents can be uploaded if necessary, and then they will contact you to discuss the loan portion. How much are you eligible for? We do not know for sure what that's based on. We have been told that it's anywhere between 2 and 6 months of cash flow that are going to be affected by the disaster. So they are probably going to use the annual sales that you put in minus cost of goods sold and multiply that out by between 2 and 6 months in order to create a maximum loan amount. We've also been told recently that there could be a cap put on the total loan amount that will be available to each borrower. So we've been given a couple of different amounts. 15,000 was one amount we were given, and in another one we were told it might be as high as 50,000. We don't know for sure, but just understand that even though the program itself states that loans could go up to $2 million, the initial loan disbursement may be as small as 15,000, only because of the amount of money in the fund right now. Doesn't mean that later on you might not be able to go back and request more, but I think initially, and I think this would be prudent, I think initially they're going to put a cap on the amount of money that each business will be allowed to have access to. So that money can then be used for normal business operating expenses. You can use it to pay your utilities, make mortgage payments or rent payments or any number of normal business operating expenses. You cannot use it for capital investments, improvements on the property, anything that would be outside of normal ongoing business operating expenses. So that's what that loan program is. The term on those loans are going to be up to 30 years. They are going to be determined individually. I'm thinking they'll probably be fairly consistent at 20 to 30 years. The rate will be 3.75% for for-profit businesses and 2.75% for nonprofit organizations. And there is no prepayment penalty. We are suggesting that if you do get the money, you put it in a separate bank account and just use it for disaster-related expenses. They need to be disaster-related expenses, meaning if you couldn't pay your mortgage during this disaster period and during the pandemic period, then that is a legitimate disaster-related expense. So anyway, and so just use the money as you need it. And then when things get back to the new normal, whatever that is, if there's any money left in that account, we suggest that you just pay down the loan. And the reason for that is because if you no longer need it for your personal business, for disaster-related expenses, then if you pay it down, you have put the money back into the bucket so that other people that are experiencing disasters can get access to it. And so then the remainder of it would be at the term and rate that you agreed to when you received the email from SBA. So that's pretty much it in a nutshell. I'm sure we have questions from people that either would like to apply or have already applied and are waiting, or have received it and are not sure how to use it. So why don't we open it up for questions?
So I'm gonna pause. Chris is looking for any questions, specific questions.
Yeah, I have a question.
This is Suzanne Garvey. I have a question. So we did apply but and I have an application number. We haven't gotten any advance has come through our bank, but I'm not sure if we checked the box saying yes to the advance. We did this very early on, like at least 3 weeks ago, and So I called yesterday to find out if there was any way to review our application, to just kind of double check the information that was submitted, and I was told there was not. Is that true?
That is true. Were they able to find your number?
You didn't even want to look it up. I have the number.
No, we can't look it up, but I can tell you that I was on with 2 different people yesterday that are unable to make calls themselves, and we got right through and gave them the application number, and they looked up the application and were able to confirm that it was in processing and confirm the name of the business. So I would say try the number again. You called the 800 number?
Yeah, I don't have it in front of me at the moment, but if you want to give it to
I'll
me
give you the
again.
number. I can give you the number.
Okay.
It's 800-659-2955.
Okay.
And
So I
a
asked
helpful
if-
thing.
Okay.
I'm sorry, go ahead.
I was just going to say, I did ask specifically if I could review the application, and she said no. So maybe that's why.
Yeah,
an
so
application.
I would just say, so when you call that number, it's option 1, I think, just that says information about the COVID-19 disaster, I think, and just tell them you would like to check the status of your application and give them the application number. Do you have that printed out page that has the
Yes.
You do? Okay. So if you look up in the top right-hand corner, there is an expiration date. And that expiration date is 6 months after you applied. So that will tell you the date that you applied.
Okay.
They don't have the application date on there, but it does have the expiration date. And we know is that's 6 months after. So if you applied, you know, it would have been after March 30th. It would have been March 30th or later, because that's when the new application was in place. But that would be helpful to know, because as I said, I haven't seen people getting their deposit that applied after April 7th, but I'm sure it's at least a week past that. I just haven't gotten notifications. So at least that might put your mind at ease a little bit, knowing that you may still be in the queue. And the 2 people that I discussed with them yesterday were both in processing, and again, they were able to, they asked the name of the business, we confirmed it, and they knew the number of employees that were put on the application, so I knew they were looking at the application.
Oh, okay.
But they could not provide like a confirmation on an email address or anything else. So as long as you don't ask for too much, they will. I think they will provide at least a confirmation that it's in the system. So that was reassuring.
Okay, thank you.
You're welcome.
Hi, this is Sue Church. I'm here for both the Village Green Gallery in Weston and also a small nonprofit, New Thought Vermont, that is also in Weston. And I'm wondering what the definition of employee is. The New Thought Vermont does not have paid employees, but we work with several independent contractors. Do they count as employees?
They do not.
Okay.
They do not. An employee is defined as either an owner-operator, whether they pull a draw or not, plus employees that are paid through the company.
Okay, thank you. And my other question was, if I could remember it. Oh, yes. How about folks who are, who are seasonal employers? So, for instance, a company like the Village Green Gallery may have, only 1 or 2 employees during like February and March, but as of May would have been, except for this disaster, hiring more people. So
In my mind, I would justify that as use what would have normally been the situation, if not
Okay.
for.
Okay,
Yeah,
great, thanks.
I could justify that in my mind.
Thank you. We'll say Chris said.
That's right. Yeah, right. Get me in trouble, why don't you? Any other questions?
Little bit about, so some of what I heard you talk about last time is how is the kind of the net effect. So if someone's applying for the payroll program and they also apply for the EIDL, how an applicant cannot double dip.
Yeah. So what I'll do is I'll go right into the Paycheck Protection Program, and then
Yep.
I'll talk about how they have a crossover potentially. I don't think there are any more questions on the EIDL, so I'll just dive right into the Triple P, my wrestling name for the Paycheck Protection Program. So the Triple P program, that is done directly through a lender. It's guaranteed by SBA to the lender, but lenders are the ones that actually make the loans and collect the information and provide the opportunity for forgiveness afterward. So they are the primary source of the money and all of that. Now, SBA are the ones that are going back and providing the reimbursement for the funds when the businesses come back to them with the documentation required, which I'll talk about. And then we provide a guarantee to the bank. If you default on the loan, we are guaranteeing the bank that we will reimburse them for what was defaulted on after they attempt recovery. So that's where the SBA comes in on the Paycheck Protection Program, whereas with the EIDL program, the Office of Disaster Assistance is actually within the SBA and tasked with making those loans directly to individuals and businesses during a disaster. So that's the difference between the two. All right, so on the Triple P, what happens is that your company, and when I say your company, I also am talking about people that are independent contractors, which is why independent contractors are not eligible to be counted as an employee for other companies, because they have the opportunity to apply for both the EIDL and the Paycheck Protection Program themselves. So as defined by the Department of Labor, an independent contractor is someone who a company does not pay payroll taxes for and other expenses because they potentially can work for more than one company. So as their own business, they can apply it themselves. So the company would approach their bank, not physically, well, within 6 feet they can, I guess, but but you would contact your lender, and we are encouraging people to contact the lender that they use for their business relationship, because many lenders now are requiring that the applicant have a business relationship with their organization already. There are a few institutions in the state of Vermont that are allowing non-customers to come in and make an application for the Triple P program, but not all of them. So we recommend that you contact your financial institution and see if they are providing them, which the majority of lenders in the state of Vermont are. And there is a very short application form. Most of the financial institutions have them online. Carol, I think you have, I sent that to you last time. It's a really simple 2-page application form. You basically provide information about the number of full-time equivalent employees that you have, not full-time employees, full-time equivalent employees that you have, and the amount of payroll, the dollar amount of payroll. Both of those are an average monthly figure based on 2019 numbers, or For seasonal businesses, there is an option that they can use a different time period, and that is for the time period between February 15th and June 30th of 2019. And if it's a new business that was in business at February 15th, but is relatively new and did not have and was not open in those months of last year in 2019, they can use January 1st through February 29th of this year. But what's going to be created by whatever one of those measurement periods you use, an average monthly payroll cost. That's your baseline number, average monthly payroll cost. That number is multiplied by 2.5, and that creates the maximum loan amount that will be available to you in the PPP program. So we'll use super simple numbers here. So your payroll is $100, and let's say you have 10 employees. And so you take your application into the bank, or you submit your application along with payroll records. You have to provide some sort of documentation that you in fact have those employees. And you give them that package and they underwrite the loan. They just take a look, make sure you have the documentation you need, look at the relationship you have with the lender. They come back to you and say, okay, you've been approved for $250. So 2.5 times your average monthly payroll. That $250 is deposited into your bank account. The day it's deposited into your account, and this is a very critical piece of information, the day it's deposited into your account, the clock starts. You have 8 weeks to spend that money on primarily on payroll. It's a paycheck protection program. It is designed to bring people back to work or to pay them if they're already working. It is a paycheck protection program. So we want people to get off unemployment if possible. Bring people back in, bring them back from part-time to full-time. And there are some companies that are paying people, putting people back on the payroll even if they're physically unable to come back into their place of business because of the stay-at-home policy, but at least they will be available and ready to ramp up quickly when that ends. So for 8 weeks, the payroll will be paid. And let's say that you have the exact same number of people, you have 10 employees, they're all full-time, and at the end of the 8 weeks, you have paid them all what you paid them at whatever the base period amount was. And you have now spent what? It's going to be $200, right? So it was $100 per month, average monthly payroll. 8 weeks have gone by, 2 months, so that's $200. So you ask yourself, what do you do with the other $50? The other $50, that 0.5, is a cushion. And as a cushion, it can be eligible for other expenses to be paid. So for instance, if your payroll went up a little bit from last year, so let's just say that you increased everybody's wages by 10%. So if that's the case, when you take your payroll back into the bank, your payroll that you actually paid was $220. And so that cushion will take care of that. Or let's say it was the same and you had $50 left over and you said, geez, what can I spend that on? Well, there are a couple of other eligible, they're called other expenses that are eligible for the program. And those are utilities. There are a couple of different definitions for that, but utilities is the overall title of it. Rent, so if your business pays rent to someone and you have an active and current lease agreement that was entered into prior to February 15th of this year, rent payments could be included in that. If you have a mortgage, instead of paying rent, you can use it to pay the interest on the mortgage, not the principal, but the interest on the mortgage. And those are primarily the uses that you can use the extra funds for. If they are eligible expenses, then when you take that documentation into the bank at the end and you say, I had $200 in payroll expenses and I have $50 in a combination of rent and electric bills. And those are all qualified expenses and you have documentation to prove it. The bank could then forgive the entire loan. 100% of it. Just go away. The tricky part is that you have to make sure, number one, that you spend it in the 8 weeks, and it has not just spend it, but it has to be incurred in the 8 weeks. If your payroll falls outside of those 8 weeks, that's irrelevant. It has to be incurred in the 8 weeks. If you have a payroll that, started 5 days before and ends 5 days before the end of the 8 weeks, you have to calculate out what the actual pay was during those days of the 8 weeks. You can't base it on what your payroll period is. And the utility costs, oftentimes, well, obviously, Green Mountain Power is, or whoever your utility company is going to send you a bill after. So you can wait until that bill comes in and, prorate it by the number of days, and then use that as your documentation. A lease agreement is fairly clear cut. But the important thing to remember is that those expenses have to be incurred during those 8 weeks. They cannot be back pay, can't be bonus pay. It can't be the sewer bill for last quarter, even though you paid it during the 8-week period, you didn't incur it during that 8-week period. So the important thing to remember is you have to be able to document that the expenses were incurred and you used the money from that account to pay for them during the 8-week period. So that's the Paycheck Protection Program. You have the money that is lent to you. You have the opportunity to spend it on a few things, primarily payroll. You have the opportunity to use it for other expenses if there's money left. The thing to remember is you have to spend at least 75% of the total loan amount on payroll in order to be eligible for a full amount of forgiveness. 75% is the key number. So most people that I have found are having a little bit of difficulty bringing all the employees back. We have been instructed that how that's going to be determined at the time when you go in for forgiveness is, we'll use my example of 10 employees and $100. So if you have those figures and you go back to the bank and you say, I was only able to bring back 8 FTE. I had 5 full-time people and I had 6 part-time people. That makes 8 FTE. The part-time people were 20 hours each. So that means that 80% of your FTE came back. What they will do is, first of all, what you have to remember is, if only 8 people came back, then 20% of the money for your payroll wasn't even used. It should still be sitting in the bank account. You obviously are not going to ask for it to be forgiven because it's still sitting there. You have not spent it. So what they're going to do is say, okay, we will just prorate the forgiveness amount to 80%. That the remaining money will be given back to the bank because you didn't spend it. You can't ask for forgiveness for something you didn't spend, because if you didn't have the employees, what would you have spent it on? If you would have spent it on anything other than payroll, it would have been an unqualified expense. So the other expenses that you brought in for the 25% will be prorated at the same amount. And that's how the forgiveness program is going to work. If there was an expense that you innocently thought was forgivable, you spent the money on it, and let's say you thought it was a legitimate payroll expense, but it really wasn't. I don't even know what that would be, but let's say car expenses or something. And there was something left that you had spent, so you now have a balance that you owe the bank because it wasn't forgiven. That's where the rate and term comes in, that it creates a loan. So the loan, it turns out that not all of it was forgiven, so it goes back to being just a portion of it sitting in this bucket that is a loan. That loan, all of them have a 2-year term at 1%. The important thing to remember is you can't use that as a loan to pay off other things. You can't use that for non-qualified expenses just because it's a 1% loan for 2 years. When you sign the loan documents, you state that you will only use the money for qualified expenses under this program. And if you intentionally use it for other things, thinking that, well, I'll just have that loan for 2 years, you have used disaster money for non-disaster expenses. And that is not good. So you want to keep the money separate, pay only the things that you should be using. And when you go back in, if you were not able to spend all the money, pay it down. The rest of it's forgiven. You're done. The way the EIDL money could cross over is, let's say that you applied for your EIDL and you got it today. And this actually happened to me today. I talked to somebody. And they also got their PPP approved today. So they got $4,000 in their checking account from the EIDL. And then a couple hours later, they got $50,000 in their account for the PPP. So now all of a sudden they have money on both sides, and they're not clear as to whether one of them is going to offset the other or how they play in the sandbox together. There are a couple of different scenarios out there, and in one of them, if you received EIDL money, we know it's going to be forgiven. That's the loan advance piece is automatically forgiven. What that will do is when you go to get forgiveness on the PPP program, they will subtract out the $4,000 that you got, or whatever amount you got from the EIDL for the forgiveness program. Because if you already got it forgiven on one side, they're not going to give you money twice for the same purpose. However, we've also been told, and I've seen it written up in the Code of Federal Regulations because I've done some research on it, that as long as you don't use both monies for the same purpose at the same time, then potentially it would not impact the forgiveness on the PPP. So for instance, if they took that EIDL money and used it to pay a supplier. So let's say it was a deli, and the deli owed their supplier, their meat supplier, $5,000. So they took that $4,000 from the EIDL and paid off their supplier. That has nothing to do with payroll, has nothing to do with utilities, nothing to do with rent, nothing to do with the qualified expenses under the Paycheck Protection Program. So they have not, it's very clear that they have not double dipped and used the same forgiven money for the same purpose at the same time. So we're not sure, we haven't been given 100% direction on how this will play out in the end. And as you all know, rules change after they've been implemented, because a couple things have changed already during these programs. But from what I can see and what we've been told, chances are pretty good that as long as you can very clearly define that you did not use both forgiven dollars for the same exact thing, you didn't use the $4,000 to pay your employees for the same payroll period, then it is possible that they will both be forgiven. But I'm telling people, be conservative, assume it won't happen, and if they allow you to have both, then it's a gift. But that's how they can play off of each other, and it's not super clear. I wish it was more clear. The lenders are the ones that are biting their nails down to the quick right now, because they don't know how those are going to play in the sandbox together when the forgiveness part comes in the end. But we're all hoping that they're going to take the easy road, that SBA and the Treasury Department are going to take the easy road and say, as long as they can clearly define that they didn't spend it, they didn't get free money twice for the same thing, then we'll just forget about it. So that's how we're playing it at this point. All right, so I'm sure we have some questions. Oh,
okay. Chris, Matthew Lamb had a question.
Yes.
And I'm going to see if I can say this correctly. His question was, I thought that you had to use one of two date ranges to determine your FTEs for your seasonal business.
No, so the two date ranges there are two date ranges. One of them is the entire year of 2019. And then if you are a seasonal business, you can use the average payroll for the period of February 15th through June 30th of 2019. The third one that I talked about is only for new businesses that were not active during one of those other two options. So seasonal businesses can use either the full year, or they can use February 15th through June 30th of last year.
Maybe this is just a clarification for me, but when you're talking about 8 weeks for the payroll,
Yes.
What's the date for the 8 weeks for PPP, I think?
The date that you receive the money in your bank account.
Okay, yeah.
Is when it starts. 8 weeks forward. No days backward. That's been a common misconception, and I'm not sure where it came from, but you cannot pay back pay.
Going forward, and so someone might need to create a special payroll if they incur payroll and it needs to be paid within the 8 weeks. Is that right?
They might need to, but I mean, it's really more of a calculation thing. You're going to use the money as you need to use it. And really what's important for the forgiveness portion of it is that you just have documented proof that those hours were used during that 8-week period. This is the hours that were used, and this is the pay that was paid for those hours. And again, I want to stress that the full-time equivalent, the definition of the full-time equivalent is the total number of hours worked, everyone combined, all of the employees, eligible employees combined, all of the hours they worked, divided by 40 in a week is the number of full-time equivalent. So you could have 40 employees that all work 1 hour in a week, and that is one full-time equivalent. And I think that the common misconception is that the term FTE means full-time employee. It doesn't. It means full-time equivalent, which includes both full and part-time employees.
Okay.
Next question.
Matthew had a follow-up. If an employee's work occurs in the 8 weeks of the PPP, but the last week is paid the following week, does it count in the 8 weeks of payroll for the PPP? Is the FTE for 40 hours or 30 hours? Please clarify.
Okay, so two different questions. The first one is, it doesn't matter when they're paid, it matters when they work, when they've earned it. So you could think of it this way. If you were paying your employees every single day, At the end of every day, they came to you with their handout, just like the old days, and you paid them for the hours they worked. That's the amount of money, and that's the amount of employees for 8 weeks, every day. So when your payroll is calculated and how your payroll company handles it and what day of the week it falls on, irrelevant. You need to figure out the number of hours that were incurred and what the dollar amount was paid. Even though your payroll period might be outside of those timeframes, you just need to figure it out, just like you would if somebody left your business. If you had an employee that quit, you're not going to pay them until the end of the pay period. You're going to figure out what their pay was for the time they were there until they left. Same thing, same principle. FTE for 40 hours or 30 hours. Well, the definition of FTE is full-time equivalent, the number of hours worked in the week divided by 40. You're thinking of full-time employee. That's not what this is. This is full-time equivalent.
Any other questions? Chris, are you still available for the quick phone calls that you offered last time?
Yes.
Excellent.
No,
Thank
not
you.
for the people in the Okemo Chamber of Commerce. Sorry, you've
You're
used up all your
horrible.
time. No. No,
Thank you.
absolutely. I am absolutely available. Let me put it into the chat. So here is my email address. And what I'm doing is I am setting up 20-minute phone calls for individuals that would like to have a private conversation with me. And I don't multitask. When I'm talking to you on the phone, that's all I'm doing. And I just want to make sure that you get the information you need as much as I can provide you, because obviously the rules have not been finalized yet for some of this forgiveness stuff, but I can show you the rules I have. I can show you what the lenders are using right now. And so we at least all are on the same page. And I am happy to have that conversation with you about either one of the programs. But you do need to email me so we can set up a specific time, because I do schedule those all day for 10 hours, 20-minute meetings with 10 minutes in between just to answer emails. So I'm happy to do it. Just email me and we will set up a time.
You also
you.
referenced. Oops,
I'm sorry?
I just said, God bless you. Sounds like a grueling day.
a lot. So Chris, you referenced 2 documents in your talk. So you talked about the PPP 2-page application, and you also talked about another information sheet that you sent through last time. I just want to make sure that I make that available.
Yeah, absolutely. And actually, I'd add another one to that too. So I've got the cheat sheet that I created. That's just, hey, this is what you need to have in front of you when the EIDL portal opens back up. Knock on wood. Hopefully, it will. With the link, and so I'll send you that again. And then also the PPP application. It's actually a 4-page form, but the part that you fill in is really only 2 pages. The other 2 pages are just guidelines, but they do outline those instructions for completing the form and what those time periods are for seasonal businesses and new businesses. So I will send you the 4-page form, plus the cheat sheet, plus the official, which has come out since we had our last meeting, the official Code of Federal Regulations interim final rule on the Paycheck Protection Program. It is an official document from the OPM federal government, and so I use that a lot. It has Q&As inside of it to answer questions about what are eligible payroll expenses and what are specifically excluded from payroll costs and that sort of thing. So it outlines the entire program with the information that they had at the time. And so it's basically the best information we have right now. And so I will give you that as well.
Great. And so if people want those handouts, it's probably on our website or some of it in the under the COVID button. But if you would just send me a note to my email address, everybody, I will make sure you have those 4 handouts that Chris is talking about. Thank you. Anything else?
I do have a quick question. This is Suzanne Garvey.
Sure.
So we have, so I guess the short question is, if we have, from the time that we had people laid off or this all started and we bring people back on, we have someone that's like at the anniversary of their employment or they're getting a raise, we can go ahead and give them that raise if we're so inclined. Our numbers aren't stagnant from the payroll numbers that were calculated before.
Yeah, sure.
Okay.
That's fine.
Okay.
Yeah, just do what you would normally do. And it's okay to have more payroll expenses, which is what that cushion is for. It's okay to have more payroll expenses. What you want to avoid is having less, because then the proration comes into effect. So if your payroll expenses are higher, that's fine. Yeah.
All right. Thank you.
You're welcome.
I think we're probably good to go. Thank you so much. And Chris, thank you. I think you're our new best friend at the SBA.
Well, I'm glad to hear it. Anybody give me a call. I'm happy to talk to you and happy to talk you off the ledge if you need to be.
Excellent.
Thank you.
Thank you. Bye,
Okay,
everybody.
bye everyone.
Bye.
Bye.